Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 27th of October 2019 and we're briefly looking at the most important date for this week. Wednesday the 30th of October, when the FOMC of the Fed will announce its decision on interest rates and what is likely to happen thereafter. So let's investigate. Yesterday, we published our weekly gold and silver update, and if you haven't had an opportunity to view it as yet, we've placed a link in the description box below. Now, for some 3 weeks, we've been stating that gold and silver prices will more or less consolidate until this coming week, when the Fed will not only reveal its interest rate decision, but also may suggest or allude to whether another cut is possible before 2019 is out. Now, of course, Jerome Powell's not going to stand up there and say, yes, we're lowering rates next month. But there might be something in his answers that could give us a guide. Well, Bloomberg reported on Friday that the majority of economists they surveyed, which were 40, between the 21st and 24th of October, some 85% of them said the following, that they, quote, anticipate the Federal Open Market Committee will reduce rates by 0.25 percentage point when it wraps up a 2-day meeting in Washington on Wednesday. That would lower the target range for the Fed's benchmark rate to 1.5 to 1.75%, unquote. Now they then added this, quote, 56% of respondents said in the event of such a cut, policymakers would telegraph, either in their policy statement or through Chairman Jerome Powell's post-meeting press conference, that they are likely to pause for some time before making another rate move, unquote. Now that was just 56%, so it's still the majority. Now Thomas Kosterg, senior US economist at Pictet Wealth Management in Geneva, told Bloomberg that, quote, it might well be a hawkish cut, as Powell will likely signal some resistance to cut rates more, unquote. Now this to some degree is supported in that the Fed has already cut rates twice this year, in July and September. And Fed Chair Jerome Powell made it very clear that the last cut was more of a form of insurance than an economic necessity. There is so far still strong jobs growth and quite high consumer confidence and spending. But inflation is lower than targeted, and the rest of the major economic powers, certainly in the West, are slowing down, but so too are those in the East. And in the case of Europe and Japan, they are actually into negative interest rate territory. Now, to be frank, we would not favour reducing rates this month, but would leave it until December. But the Fed is under so much pressure, both with liquidity issues and President Trump constantly haranguing them, we tend to reluctantly agree with the other economists that they may as well reduce rates now in October and then wait until the new year to see how the Christmas trade and the China trade negotiations pan out. It will also give them the opportunity and flexibility to reduce rates again in December if the economic position deteriorates dramatically before then. Now, interestingly, the economists polled assigned just a median 30% probability that the Fed will cut rates all the way to zero before the end of 2020. Now, with the presidential elections due by then, and assuming President Trump is both still in office and will be fighting for a second term, we can all be quite confident that he will be exerting as much pressure as possible to get rates down to 0% by mid-year or the third quarter at the latest. Now currently, 2-year treasuries are offering a yield of 1.63%, and 10-year treasuries are being offered at 1.805%, their highest level since September the 17th. So the inverted yield curve has at least disappeared for now, and rates are slightly rising, suggesting that future cuts may not be quite as aggressive as first anticipated. But as a week is a long time in politics, a month is a long time in economics, especially in today's rather chaotic environment. What will happen for certain, no one knows, not even the Fed. But this week's press conference after the FOMC decision is crucial. And depending upon what is taken away on Wednesday, and the economic data then due out on Thursday and Friday, this will give investors and traders a good indication as to where the dollar and the price of gold and silver is likely to be headed in the coming months. But as we have stated so frequently, China, Iran, and now Turkey all have the potential to upset even the best laid plans. And whilst Brexit has been delayed yet further and again, we still cannot ignore its potential impact on the West either. What do you think? Lower rates another twice this year or just the once? 0% rates next year, or will the Fed manage to keep them in positive territory? Do share your thoughts. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.